3 months ago, almost no retail investor had ever heard of this chip startup. They raised $750 million at a valuation of just $6.9 billion. Then NVIDIA showed up and paid $20 billion in cash for the same company, not through a traditional acquisition, through a carefully structured deal that looked like a licensing agreement on paper, but effectively took all the core assets, all the top engineers, and all the critical technology. This is the largest transaction in NVIDIA's history, nearly 3 times more expensive than their previous biggest acquisition. When a company that is already the most valuable chip company on the planet chooses to spend $20 billion in cash to lock down a technology you have barely heard of, there is a reason, and retail investors are only starting to understand what that reason is. I am your host. This is Wealth Lab. We break down the money, moves that matter, hit subscribe, turn on the bell. Let me take you inside the most strategically important AI deal of 2026. Let me be absolutely clear up front. Nothing in this video is financial advice. I am not your financial advisor. This is for educational and entertainment purposes only. All investing involves risk, including the potential loss of principal. Do your own research before making any investment decisions. I hold no position in any stock mentioned in this video as of the recording date. Now let me walk you through the actual deal because the structure tells you more than the headline ever could. In December 2025, NVIDIA and Grok announced a transaction. NVIDIA paid approximately $20 billion in cash. In return, NVIDIA received a non-exclusive license to Grok's core AI inference technology. At the same time, Grok founder and CEO Jonathan Ross, company president Sunny Madra, and a significant portion of Grok's engineering team joined NVIDIA. Grok itself remains an independent company. Its cloud business, Grok Cloud, continues to operate separately under a new CEO. On paper, this was not an acquisition, it was a licensing deal with a talent component. But the substance tells a different story. Why go through this legal gymnastics? The answer is straightforward. Antitrust. A traditional merger of this size would have triggered a mandatory review under the Hart-Scott-Rodino Act. That review would have taken months. And with the FTC already circling big tech with renewed aggression, NVIDIA probably would have faced serious pushback. By structuring the deal as a non-exclusive license plus a talent hire, NVIDIA avoided the pre-transaction antitrust filing entirely. The legal reasoning is simple. Under HSR rules, a non-exclusive license does not count as an asset purchase regardless of price. And hiring personnel is not subject to HSR review either, so NVIDIA paid $20 billion, took Grok's core technology, hired its key people, and never had to ask for permission. But the regulators noticed. In March 2026, Senators Elizabeth Warren and Richard Blumenthal sent a letter to Jensen Huang, suggesting NVIDIA may have violated the HSR Act with a so-called transaction for avoidance. The senators argued that while the license is non-exclusive on paper, NVIDIA's effective acquisition of Grok's key employees significantly reduces the value for any other company that might try to license the same technology. The FTC has not yet taken formal action, but the scrutiny is real, and it tells you something important about the stakes of this deal. Now, let me put the numbers in perspective. Just 3 months before the NVIDIA deal closed, Grok raised $750 million at a valuation of $6.9 billion. The funding round included BlackRock, Neuberger Berman, Samsung, Cisco, and other major institutional investors. That means NVIDIA paid nearly 3 times what the entire market had just valued Grok at only 3 months earlier. For context, NVIDIA's previous largest deal was the $6.9 billion acquisition of Mellanox in 2019. This deal is nearly 3 times larger. And unlike the Mellanox acquisition, which was a straightforward buyout, this one walks a careful legal line designed to avoid regulatory scrutiny. NVIDIA had the cash. As of the end of October 2025, the company held $60.6 billion in cash and short-term investments, up sharply from just $13.3 billion in early 2023, so the money was there. The question is, why Jensen Huang decided to spend it on Grok specifically? That brings me to the technology. And this is where the story gets really interesting. To understand why NVIDIA needed Grok, you first have to understand the difference between training and inference. Training is when you teach an AI model, you feed it massive amounts of data, you let it run for weeks or months, you pay for compute power, and you do not really care about speed, as long as the job gets done eventually. Inference is when you use the trained model. Every time you ask ChatGPT a question, that is inference. Every time an AI agent writes a line of code, that is inference. Every time a recommendation engine suggests a product, that is inference. Inference happens in milliseconds. It has to. And unlike training, which happens occasionally, inference happens constantly. Every user, every query, every interaction. The industry is shifting from training to inference at a fundamental level. Industry projections anticipate that, by 2030, inference will account for up to 75% of total AI computing workload, representing a market size of $255 billion. Jensen Huang himself declared at GTC 2026 that the inference inflection point has arrived. He believes the AI infrastructure market will become a $1 trillion opportunity, and he specifically stated that low-latency inference should represent approximately 25% of the compute in an AI cluster. That number matters. If you are building a $1 trillion AI factory, 25% of it being dedicated to one specific workload category is a massive addressable market, and NVIDIA's current GPU architecture was not designed to dominate that market. Here is the technical reality. GPUs are generalists. They are incredibly good at a wide range of parallel computing tasks. That is why they won the training market. But inference, especially the kind of real-time, low-latency inference that powers AI agents, coding assistants, and interactive systems, has different requirements. Inference cares about time to first token. It cares about predictable latency. It cares about energy efficiency per query. And these are precisely the areas where GPUs are not optimized. This is where Grok's LPU, or Language Processing Unit, enters the picture. Unlike a GPU, which schedules tasks dynamically and has to manage complex memory hierarchies, Grok's LPU uses what is called a deterministic data flow architecture. The computation pipeline is statically compiled. Everything is known ahead of time. That eliminates the unpredictable latency that plagues GPUs in inference workloads. The result is a chip that can generate tokens at speeds that GPUs cannot match, with far lower power consumption. The proof is in the numbers. In March 2026, at GTC Nevada, NVIDIA unveiled the Grok 3 LPX, the first product resulting from the deal. The system is housed in a liquid-cooled rack containing 256 interconnected LPUs. It provides 128 GB of on-chip RAM with 40 petabytes per second of memory bandwidth across the full rack. To give you a comparison, Nevada NVIDIA's own Rubin GPU uses HBM memory with roughly 22 terabytes per second of bandwidth. The LPX has 40,000 terabytes per second. That is not a typo, 40,000. This matters because inference decode is memory bandwidth intensive, not compute intensive. The LPX is built specifically for that job. And the headline number NVIDIA put on stage is staggering. The combined Vera Rubin NVL72 plus LPX system delivers up to 35 times higher inference throughput per megawatt for trillion parameter AI models compared to NVIDIA's own previous generation Blackwell NVL72. That is not a small improvement. That is a generational leap. The system is capable of delivering 300 tokens per second per megawatt at a cost of $45 per million tokens. To put that in context for you, that is the economics of inference, at the scale where AI becomes a utility, not a luxury. Now I need to be precise about what the 35 times claim actually means because there is nuance here that Wall Street is just starting to digest. The unit is per megawatt, not absolute throughput. That means the claim is about energy efficiency, not raw speed. This distinction is critical because it tells you exactly where NVIDIA sees the battle being fought. Inference at scale is not about who can generate the first token fastest. It is about who can generate 1 trillion tokens per Dalton Y without melting the power grid. The 35 times number is NVIDIA's way of saying that the Grok architecture can deliver massive inference throughput at a fraction of the energy cost of pure GPU solutions. That is the economic moat, and the architecture is genuinely clever. NVIDIA is not replacing GPUs with LPUs, it is pairing them in a heterogeneous, disaggregated design. The Rubin GPUs handle the pre-fill phase of inference, which is compute-intensive and benefits from GPU strength. The Grok LPUs handle the decode phase, which is memory bandwidth intensive and benefits from the SRAM architecture. The two work together through NVIDIA's Dynamo software, which classifies requests and routes them to the right chip. This is not a replacement strategy. This is an extension strategy. NVIDIA is building a platform that can do everything rather than leaving the inference market for competitors to pick off. So why could NVIDIA not build this themselves? That is the question that haunts the bulls and the bears. NVIDIA has some of the best chip designers on the planet. They have more engineering talent than almost any company in semiconductor history, but building a deterministic LPU architecture from scratch would have taken years. Grok had been working on this since 2016. Their founder, Jonathan Ross, was one of the creators of Google's TPU. The team had already solved the hard problems around static compilation, explicit data movement, and SRAM scaling. Buying Grok's technology and talent compressed what would have been a multi-year R&D effort into a single transaction. That is what $20 billion buys you. Time and the market is validating this thesis in real time. On May 14, 2026, just a few days ago as of this recording, Cerebras Systems went public. Cerebras is another inference-focused AI chip company. Their IPO priced at $185 per share. On the first day of trading, the stock opened at $350 and closed at $311.07, a gain of 68%. The company raised $5.55 billion in the offering. The IPO gave Cerebras a fully diluted valuation of approximately $106 billion. That is a massive number for a company that is still scaling its revenue. But the market is telling you something. Wall Street is now pricing the inference opportunity. The Cerebras IPO surge is not just about one company. It is confirmation that the inference thesis is real and that investors are hungry for exposure. What makes the timing particularly interesting is that on the 17th of April, 2026, OpenAI announced it would purchase over $20 billion worth of chips from Cerebras and take an equity stake in the company. So you have NVIDIA spending $20 billion to lock down Grok and OpenAI spending $20 billion to lock down Cerebras. Two roughly $20 billion deals on opposite sides of the same inference war. That is not a coincidence. That is the market bifurcating. The inference market is large enough that multiple winners can emerge. But the battle lines are being drawn right now. Now, let me analyze what this deal means for the broader AI investment landscape, because the implications go far beyond one company. First, the direct beneficiaries. Any startup building inference-focused AI chips just got a massive valuation boost. The NVIDIA deal effectively put a price tag on inference technology. If Grok was worth $20 billion to NVIDIA 3 months after being valued at $6.9 billion, then companies like D-Matrix, SambaNova, and Etched are suddenly worth much more. Since the NVIDIA deal was announced, D-Matrix has seen its valuation expectations rise sharply. SambaNova reportedly turned down a $1.6 billion acquisition offer from Intel in favor of a $350 million funding round. Etched announced a $500 million round at a $5 billion valuation. The entire inference startup ecosystem is re-rating. Second, NVIDIA itself. The Grok deal changes the investment thesis for NVIDIA in 3 ways. 1. It fills a product gap. NVIDIA now has a credible inference architecture to sell alongside its GPU clusters. 2. It creates a new revenue stream. Inference workloads require ongoing usage. Not just upfront chip purchases, that means recurring revenue. 3. It extends NVIDIA's moat. If inference becomes the dominant AI workload, NVIDIA wants to own that too. The stock market initially reacted positively to the deal news, with shares jumping in pre-market trading as investors bet the move fortifies NVIDIA's grip on the next leg of the boom. Third, the potential victims, AMD and the custom chip efforts from Google, Amazon, and Microsoft, face a tougher road. NVIDIA just eliminated a competitor and acquired their technology. The reasoning from Jensen Huang himself is telling. In an internal email, he said the plan is to integrate Grok's low-latency processors into the NVIDIA AI factory architecture, extending the platform to serve an even broader range of AI inference and real-time workloads. He also explicitly noted that NVIDIA is not acquiring Grok as a company, but that distinction matters less than the substance. Grok is no longer a threat to NVIDIA, it is now a weapon in NVIDIA's arsenal. The SambaNova CEO Rodrigo Liang told EE Times that the signal from the NVIDIA deal is very clear. Traditional GPUs cannot compete in the inference market. That is the confession that matters. NVIDIA itself, the king of GPUs, just spent $20 billion to acquire a non-GPU solution for inference. If GPUs were the answer for inference, that deal would not have happened. Now, let me discuss the risks, because there are several that you need to be aware of. Risk number 1 is regulatory. The FTC could still challenge the deal structure. While the HSR filing was technically avoided, The FTC could argue that the substance of the transaction constitutes a de facto acquisition that should have been reviewed. If the FTC pursues this, they could seek remedies that might include unwinding parts of the deal or imposing conditions on how NVIDIA can use Grok's technology. The senator's letter is not the end of this story, it is the beginning. Risk number 2 is execution. Integrating a fundamentally different chip architecture into NVIDIA's platform is not trivial. The Grok LPU uses a compiler-based deterministic programming model. NVIDIA's software stack, including CUDA, is built around a very different paradigm. Making the two work together seamlessly, at scale across thousands of customers, is a massive engineering challenge. If the integration stumbles, the $20 billion will look like an expensive experiment. Risk number 3 is customer concentration. NVIDIA's largest customers are also building their own chips. Google has its TPU. Amazon has Trainium and Inferentia. Microsoft is rumored to be developing custom AI silicon. These customers would prefer not to be locked into NVIDIA for inference the way they are for training. If they succeed in building competitive in-house solutions, NVIDIA's inference market share could be limited. Risk number 4 is overcapacity. The AI infrastructure build-out is unprecedented in scale. One of Grok's own investors has warned that the industry's build now lease later model risks a financing crunch by 2027 or 2028 if data centers come online without committed tenants. Inference demand will ramp, but the slope could be uneven if consumer AI features fail to monetize as hoped or enterprise pilots take longer to productize. Risk number 5 is competition. Within the inference space, Cerebras just went public with a booming IPO. Matrix is well funded. SambaNova is still in the game, and newer players like Fractile are emerging. NVIDIA may have acquired Grok, but the inference market is large enough and diverse enough that multiple architectures may coexist. NVIDIA will not have a monopoly here the way it does in training. So where does that leave the retail investor? Let me give you my honest take. The NVIDIA Grok deal is a confirmation signal. It confirms that inference is the next major AI battleground. It confirms that GPUs alone are not sufficient for that battleground. And it confirms that NVIDIA is willing to pay a massive premium to own that market before competitors can establish beachheads. For NVIDIA investors, the deal adds a new growth vector and extends the moat, but the stock already reflects a tremendous amount of optimism. Execution risks are real. For investors looking at the inference ecosystem, the Cerebras IPO and the revaluation of startups like D-Matrix and SambaNova suggest that the market is now pricing in the inference thesis aggressively. Valuation matters. Some of these names are already expensive relative to current revenue. The smart money takeaway is this: inference will be huge. But the easy money in inference may have already been made by private investors who got in before the NVIDIA deal and the Cerebras IPO. For public market investors, the opportunity is now about picking which inference companies can execute, compete, and grow into their valuations. That is a harder game than it was 6 months ago. Let me summarize the core argument. NVIDIA just paid $20 billion for a technology it did not already have. That technology is aimed at a market Jensen, Huang himself says, will be a quarter of every AI cluster going forward. The product resulting from that deal, the Grok 3 LPX, claims 35 times better efficiency than the previous generation of NVIDIA's own hardware. And the market is validating the inference thesis with a 68% pop on Cerebras's first trading day. Whether you think inference is a bubble or a supercycle, the direction is clear. The AI industry is moving from building models to running them. And NVIDIA just made sure it will be running them on its terms. Zone more quick disclaimer before I wrap. This analysis is for educational purposes only. I am not telling you to buy or sell anything. Do your own research, talk to a financial advisor. Understand your own risk tolerance before making any investment decisions. Now I want to hear from you. NVIDIA just spent $20 billion on inference technology. Do you think they paid a fair price, or did they overpay by a massive margin? And more importantly, do you believe inference is the next trillion-dollar AI opportunity? Or is this the peak of the hype cycle? Drop your take in the comments below. I read every single one, and I try to reply to as many as I can. If you want more breakdowns like this on the most important capital moves in AI and tech, hit the subscribe button, turn on the bell. This is Wealth Lab. We find the signal in the noise. Thanks for watching, stay sharp, and I will see you in the next video.